Good evening, friends. We are today on the last day of our refresher course on standards on auditing. And we have heard from all the speakers, and today we have the best of the faculties here with us to discuss the practical aspects which are faced by the members in applying these standards. So I think this is a fantastic session that we have, and we'll be able to hear from these the faculties here today with us. We have Himanshu Bhai, Sandeep Bhai, Paresh Bhai, and I think I'm just waiting to listen to all of them. And I now request Shushru Chitle, my regional council colleague, to please introduce the faculties and the moderator for the session. Shushru, over to you, please.
Thank you, Drushti. Honestly, I don't think any of the speakers today require a formal introduction, but I think for the benefit of all, I'll first introduce the panelists and then I'll introduce the moderator. We'll start with CA Himanshu Kishnadwala. CA Himanshu Kishnadwala is a chartered accountant and a partner with Messrs. CNK and Associates. He is a rank holder at the intermediate and final levels of the CA course. He oversees the audit and assurance practice of the firm and works in the areas of statutory audit, Ind AS implementation, investigations, due diligence, and conversion of financial statements in IFRS or US GAAP. He has been a senior lecturer in accountancy and financial management at Mumbai University. He has also written various books of accountancy and financial management from FIJC to TYBCom at Mumbai University. He has been a co-opted member and special invitee to the Accounting Standards Board, Ind AS Implementation Committee, Expert Advisory Committee, Research Committee, and Corporate Laws Committee of WS of ICAI. He has also been a member of various groups of FRRB and member of the Shield panel for ICAI Awards for Excellence in Financial Reporting. He has been the president of the Bombay Chartered Accountants Society during 2006-7 and has been the chairman or member of various committees of BCA. So thank you so much, sir, for being with us today. Our next panelist is CA Sandeep Shah. CA Sandeep Shah is a chartered accountant and managing partner of Messrs. N.A. Shah and Associates. He has more than 37 years of experience in providing assurance and corporate services to clients. He has worked as a member of the Shield panel formed by the Research Committee for ICAI Awards for Excellence in Financial Reporting. He has worked as a member or a co-opted member of the Ind AS Implementation Committee and also as a member of the panel of technical reviewers formed by the FRRB. In the past, he has worked as a member of the ICAI's Expert Advisory Committee, Accounting Standards Board, Auditing and Assurance Standards Board, Ind AS Technical Facilitation Group, and many other groups for guidance notes issued by the ICAI. He is also a committee member of the Bombay Chartered Accountants Societies, Accounting and Auditing, and Corporate and Allied Laws Committees. He is currently on the executive boards at National Burns Center and Somaiya Education Trust. He is a voracious reader by nature and his hobbies include gardening. So thank you, sir. Thanks for being with us. Our final panelist is CA Paresh Clerk. CA Paresh Clerk is a chartered accountant and a partner of Messrs. Bansi Mehta and Company. He works in the areas of statutory and internal audits, due diligence, valuations, and accounting and company law advisory. He has been an associate professor of accountancy at Mithibai College of Commerce. He has been a special invitee on Accounting Standards Board of ICAI, co-opted member of the Ind AS Implementation Committee, co-opted member of the Committee on Accounting Standards for Local Bodies. He has also been a member of the Accounting and Auditing Committee of the Bombay Chartered Accountants Society, a member of Accounting Standards Committee and Corporate Laws Affairs Committee of the Indian Merchants Chamber. He has been a group member in the publication of ICAI on Guidance Note on Revised Schedule 6. He has co-authored the book titled Thumb Rules of Bookkeeping, published by the BCAS. He has also written numerous articles and delivered lectures at various seminars and conferences organized by various organizations. Thank you, Paresh Bhai, for being with us today. We also have an equally competent moderator, CA Naysar Parekh. He is a chartered accountant and currently works as the directors with Messrs. Walker Chandiok and Company in the Quality and Risk Management Group. He has over 15 years of experience in areas of statutory auditing for NBFC, manufacturing, telecom, and service industries. He has worked with various other audit firms in the past in the audit and assurance department. So thank you everyone for being here, and the floor is open. I'll hand it over to CA Naysar Parekh. Thank you.
Thank you, Shushruth. With this great introduction and with the eminent panelist, I welcome you on board. So looking forward to a great interactive 2 hours discuss in all practical aspects of standards on auditing. So I would like to invite Himanshu Bhai's view on starting the basics. I understand, Himanshu Bhai, that there are no levels of applicability for standards on auditing. So how do we ensure while auditing that auditing a small or medium sized clients, how do we ensure compliance with standards on auditing?
Um, Good evening to all of you, and thank you for the introduction, Shishtu. Uh, Coming to this first question on applicability of standards on audit for small and medium clients. Unfortunately, there is no distinction made in the standards on auditing on how do they apply for smaller clients or client companies which are not having too many activities in that sense, except maybe in the field of reporting on internal financial controls. The institute came out with some guidance as to, for a smaller company, how do you give a report on internal financial controls. So that probably is the only thing I remember where institute has tried to say that for smaller entities, how the chartered accountant should approach that audit on just IAFC reporting. But for all other audits, whether it's a small investment company, whether just family members are directors, or whether it's a big company, medium company, listed, non-listed, or maybe even a Section 8 company, all the standards of auditing do apply. And that's a challenge really, because sometimes the activities of the company would be so small that you will spend more time in doing all this documentation on the standards of audit rather than doing the per se audit itself on the attestation. And the fees in such cases may not be commensurate with the total time spent. But be as it that may, this is something which the chartered accountant or the auditor will have to take into account, whether the client is big or small, because he will have to comply with all these standards of audit. And in a peer review process, that also may be done by someone in Accent, which is there. Maybe the institute should in the future come out with some relaxations on how some standards can be relaxed for the smaller entities which are there. It could be in size of the number of transactions, the ownership pattern or something. But I think it would be a welcome move to avoid that workload for this some of the smaller chartered accountant auditors.
Very well summarized, sir. Any other panelist wants to add on to what Himanshu Bhai said?
Yeah. So I will take this add on to what Himanshu has said, and thank you, Shushruta and Drishti, for giving us this opportunity. So there are two perspectives I have to the question on hand. And first is that normally we always believe that one shoe can't fit all, but this is one area where one shoe fits all. And therefore, small or big, one will have to learn to wear this shoe and handle it. And the second part of it is that how do you handle this is, in my opinion, auditing is nothing else but like an exercise. You are regular at it, you will do it with ease. You try and do once in a while, you will find yourself in a tremendous body ache, and the whole systematic rhythm will not come in. And so therefore, for all those practitioners on audit, I believe that auditing is nothing else but exercise. And to address this question on the for the small entities or medium-sized entities where they are not very well structured as a large organization, and I think the AASB's the practitioner's guide to audit of small entities, which was first I think was released in 2008 and then 10 and then revised in 2020, which virtually takes care of the most of the updated standard. I think this is one of the great document. It's not very big. It's around about only 250 pages. While it may be a physical piece of document, but I would believe that for any practitioner who's looking at the SME, this is an extremely good tool. It not only gives you the checklist, it gives you the representation letters, it gives you under the IT environment audit, it gives you the the management letters. So it's an extremely useful tool, in my opinion, to overcome for the applicability for small standards is what I would like to add to what Himanshu said.
So yeah, so by that I believe many of us would now be relieved how to audit, small and medium-sized audit lines. So for the benefit of all, how we have bifurcated the question is appointment-related questions, execution-related questions, and reporting-related questions, and of course covering some specific questions related to COVID-19 scenario and so on and so forth. So I would like Paresh sir's view on the appointment side of it. So appointment term now we all know is for 5 years, and if it's a firm, then it's a 2 term of 5 years. So is it necessary to agree the terms of engagement every year, or it can be a 5-year affair?
Okay. Thank you everyone at WRC for giving us an opportunity to be here on the panel and try to answer most of the questions which are raised. So let me tell you at the outset that the engagement letter by itself is must. Okay, so that everybody should be aware, and I believe it must have been dealt with also in one of the sessions. And there is a specific standard on auditing SA 210 which deals with it. Now, your question is whether because of 5 years appointment, you need to have the engagement letter every year or not. But let me first make it very clear that even in the this 5 years term scenario also, there was no need to have an engagement letter made every year. Even the standard makes it very clear that unless the circumstances demand you need to have an engagement letter, have it every year. Even on a peer review process also, when you are there, then the engagement letter once taken need not be changed unless there are circumstances like change in management, change in terms, says certain important changes in the framework. Now, suppose during this 5 years term, you have moved from AS to Ind AS, then it is very much that you need an engagement letter to be modified, edited, and things like that. Now that you have a CARO 20 coming in, then you need to modify because there is onerous responsibility on many of the areas. So in that case also you need that engagement letter to be edited, but it is not must that you have an engagement letter be changed every year. Of course, you may, if you are specifying the audit fees in the engagement letter, every time you change, you make sure that that is modified. But otherwise, it's the same engagement letter which you could continue. But the circumstances have very well been spelled out, like, as I mentioned, if there is a ownership change, promoters change, size of businesses significantly change, because in engagement letter you have specified the locations as where you are carrying out audit and all that. So those need to be modified or edited, and a new engagement letter could be done. Otherwise, there is no need to have an engagement letter new every year.
So many times we mention the period of audit also in our engagement letter. So assuming in a scenario where nothing else has changed other than the period, so you recommend something like addendum to EL, or?
No, so what I would suggest, don't mention the period, no? So you say the engagement letter will continue till the terms of appointment, otherwise change.
Otherwise change. Yeah, very well.
I may only want to add one thing, Naysar, on to what Paresh Bhai said, and then my always belief is that including for the articles or the team, they should never presume that I need not see my engagement letter year on year and it is a part of a permanent file, because these are all mindset issues that because if they hear this, they come back and say, okay, your engagement letter is there, so I need not review it. I think as a habit, they must read this and bring it to the notice of the partner to say that, okay, this requires a change. So, that's the way I would look at that. The training and orientation program for the team members should be that a permanent file does not mean you don't open it.
Yes, Sandeep, very much right. So it should be also part of your checklist, whether engagement letter is there whether the engagement letter is reviewed, whether there is any modification required, is there a change. So what circumstances we are spelling out to change the engagement letter, we should put it in the checklist which we have.
Yes, sir. I think we are now very clear as to when to get the engagement letter changed or signed. Coming to the next question, in view of the recent circular by RBI on auditors eligibility, changes in code of conduct by ICI, changes in the Companies Act. So the moot question is, what additional audit firms should do in order to be sure about compliances of conditions of appointment? I would like the Sandeep Bhai to share his view. Basically, what more or what additional procedures firm will advised or are asked to do in this scenario?
So, with the specifically in relation to the April amendment, and as it happens, the fastest fingers first, because most of them have approached firms, and more than number of offerings have been made compared to what you can engage, and therefore, if more than four presses the fastest finger and it results into your inability, you have a challenge. So first part is therefore to ensure that as a result of your appointment, you do not become ineligible because you've already crossed the limit between what RBI has said. And this is a process where it's not about, one after the other. You don't really know how the board members are thinking and how they are approaching so therefore it is very important that even if you are making your eligibility known to the banks or NBFCs, it is important for you to know that there is a kind of pre-check required, so that there is no the whole process need not be done. So that I would believe would be the one area. The second area which I would definitely believe and read the code of ethics in entirety. I think these are two large volumes. There have been substantial amount of changes. There have been some deferments, and most of the time the challenge is that the members do not read because they find it too bulky. But there is no moving away from the fact that because it has got various sections and obviously it has been rewritten, and to do that, I think the important aspect would be to create a task force within the organization. Now, whether you're a small practitioner or you're a large practitioner, it need not mean that there has to be everything in-house. There can always be within group of practitioners where you can create a task force and separate out, and maybe sharing of knowledge. Britishers, they always learned one thing: you divide your problem and then you rule. So I think we can always learn from there. You divide the issue and then probably learn from each other. That could be the second part. And the third part definitely is that one will have to have a checklist. I don't think there is any way in which in a growing practitioner where more than one services are being offered, one will have to have a robust checklist. There will have to be a quality oversight over the engagements so that there are no reversals. And finally, I think the Ethical Standard Board, their website has got enough questions which they update on a regular basis, which will give you even more insights into a dilemma which you may have. So I think between the technical literature and within the organization, the newer rules of appointment, the conflict, the eligibility, non-eligibility, because RBI also somewhere says tax is not part of the management services. So, these are going to be some of these questions, but it is important to be able to harmonize between the Companies Act, the regulatory framework, and the code of ethics, so that at least you don't find fault along with the appointments. This is what my belief would be.
Yeah. Himanshu, you are on mute.
Yeah, so to just add what Sandeep said, this RBI notification actually has put a lot of firms in a dilemma, because the RBI notification actually restricts a lot of things which are already possible under the Companies Act, like say a 5-year appointment period, which RBI brings it down to 3 years then. And section 144, which talks about other services which can be offered by auditors, RBI has tried to interpret it in a little different way and say that tax services can be offered. The code of ethics also at some places put some limits on maybe the holding of a credit card, giving a loan, giving a guarantee. So as Sandeep rightly said, the three things will have to be clearly synchronized, and that is something which every firm will have to do, whether what services are possible before, what is possible after, whether it's falling within the framework. Say for instance, in the Companies Act, there is a restriction on doing other services for a subsidiary, but there is no such restriction sometimes on an associate or a joint venture. So you may have to look at the structure also as to how do you go about this, and it's very critical that you do this before you accept any appointment in the as per the bank notification.
Yes, right. Very well covered. Just to update, last week only, the institute had come out with the effective date of the three of the clauses which was, deferred on the code of ethics, namely the
Right.
note-la relative size and the tax services. So those will be effective from financial year 14-22. Uh, yeah. So moving ahead, taking some of the recent examples or aspects. Uh, so Himanshu bhai, I would like to like your views on documentation, as we say, should be relevant, reliable, and authentic. How do we ensure in the times of COVID, especially when the audit is also virtually online? So how do we ensure the authenticity, reliability, and relevance of audit evidence?
So on documentation, no, you actually clearly have the standard which is documentation, and that is SA 230. Now, SA 230 talks in great detail about what is documentation, and there are a lot of literature available as to how documentation should be done. But what I probably tell to all people is that for me, documentation means very simple: write what you do and do what you write. So, so I believe that's a very simple way of achieving the best documentation. Write what you are doing, and please do what you are writing when you are planning your audit plan or audit engagement or what. If you follow both these two things, whether it is due to COVID on an online basis or on a physical basis, you really will have a good documentation which is there. So in a online scenario in COVID times, lot of data is now given either by direct access to the SAP or the systems of the client. It could be through any desk or direct login into the client's system, or a lot of data is passed on by email over data backups or something. Now that entire audit planning will have to be written down, which would be different from what was when you physically visited the client in that sense. So basically this is writing down what you are doing, which is that one of two things which I said. So what you are doing is now you are accessing through any desk or the client's data directly through a password or getting data on a server or something. So you write down what you are doing there. And sometimes you have also planned things in advance that I will get things over email, or I will get the samples which I have selected. Now that's the advanced planning. So then you have written that to be done in advance in that sense. So once you combine these two things, obviously you put in place a proper sort of an index, and again do the documentation which is otherwise required in that sense. We have seen a lot of companies where documentation could not have been seen, or maybe the evidence could not have been seen physically. It is coming out as a key audit matter in some cases. But that I think something of a very extreme case, because today with the any desk access or maybe viewing the documents on screen, you are practically not able to, touch the documents, but you should be able to see any of the documents, whether it is agreements or vouchers or bills or whatever. But maybe an extreme thing in such cases would be to include that as a key audit matter, or maybe as a scope limitation or something.
Oh, okay. Right. So, like we used to there used to be a principle like WND, that is work not documented is work not done. So
Correct.
especially,
Absolutely.
yeah,
Absolutely.
right. So any other panelist who wants to add anything on that question?
No, I think what Himanshu has said, only one thing I may want to add is that particularly the skepticism becomes of a very high order, because today on a document where you are seeing a scanned image, and whether the authenticity of the document, depending upon the whether the vendor invoices, the whether whether how do you ensure that the organization proper internal control to see that the double accounting is not happening, because it is definitely, because not everybody uses an ERP package where all documents are attached, right? While our recommendation always has been that even those who are for small practitioners, we always also say that you can uh, ask the clients to go on teleprime, which means that then you can attach the documents, and therefore along with the vouchers you are able to see the document. So I think it is going to be important that if this COVID, as we believe, is a something which nobody can predict, and if there are going to be variations over next 2 3 4 years, then I think each of the practitioners along with the clients will have to learn as to how, because government is not going to extend timelines year after year, because it affects their collections as well, and therefore whatever time you got in 1920 or 2021 to do the audit, I don't think is going to be a scenario going forward. So I believe that what Himanshu mentioned was extremely right, that one will have to be proactive ahead of time, and probably not do everything after the year is over.
Right. So as
Yeah,
they say, we have to
and
be used to be the new normal. Used
yeah.
to, yeah.
Sorry, if
Yes,
I may add,
right, sir.
in sometimes when you are not, doing any online audit, if you happen to visit client's place physically, etc., so you may even cross check what you have done on a test check basis, for the assurance that what has been done online is also is properly being happening. I mean,
Right.
there is no scope of malfunctioning or any fraud there, or any kind of
Forging
misrepresentation.
of any document, yeah. Forging of any documents or something. Yeah, so continuing with the same question, so Sandeep bhai, what are the areas in which you see challenges being faced by auditors in COVID situation, be it confirmation or observation of physical inventory count, cash count, uh, from your experience?
No, so I think so. There are a couple of challenges which we have seen, right? And I think each one of us in varying formats we would have experienced. We've experienced continuity and health of members at our end. We have seen the similar thing at the client end, where some of the key critical people in charge unfortunately couldn't survive, or they were ill for extended period of time. So that gives one big time challenge, that the resource availability and the ability to plan. You give commitment, and if your team member catches COVID, 15 days gone. I mean, like, it can throw everything into array. So first part is about the fact that how does the practitioner handle this uncertainty around the team members' health and that of the client's end, and how do you ensure that your commitments are capable of being met. I think that is the first part of the and secondly, I can tell you this: too much of screen looking, as they say that after 10 hours your number 1 and number 10, both of them start looking equal, because your eyes becomes dreary, right? I mean, like, you're trying to stretch, saying that, okay, you don't travel 2 hours, you don't travel 2 hours going back home, so you put that 4 hours into work. It's a fatigue to your eyes, and I think it is therefore important that this aspect of not going wrong should be handled. That's one part. And obviously the mobility was restricted at the SME practitioners. They were finding it difficult to organize at short notice the entire IT infrastructure. I mean, like, you had only 7-10 days, and therefore laptops and desktops and your your printers and your digital signatures and your books and whatever, right? Whether you were, not everybody was on cloud, so there was something which was on physical infrastructure. So that was another set of challenge, and this ups and down. And obviously IT has seen over 30-35% inflation. Laptops, desktops, all of them have probably increased their prices over 25-30%. So that has also put pressure on the practitioners. So I would believe that that's a second area one will have to be handling. And the third part, which obviously is about the the audit paper and verification in electronic form. Now that those are basically, do you roll back, do you roll forward? You can't paint all the clients with the same brush. So only because you've seen challenge in one client, you cannot say that I will use that understanding and subject everybody to the same degree of exactness. I think one will have to be able to learn the second part of it. Professional skepticism and considering around the inventory records or internal controls are another aspect of the audit paper. All of this obviously is your opinion on the IFC, because this is very, very critical, that how does that COVID-19, how does that translate to your IFC reporting. And then obviously the alternative procedures, there are obviously subject to the fact that whether the internal auditors, obviously you can't use there as a part of your final report, but the question is that whether can you directly give instructions, so that it is sometimes possible that plants which you cannot visit, you use local counterpart. You have obviously the the digital inventory physical planning. AASB has come up with great amount of insights between what are the alternative audit procedures which you deploy and what care do you need to take. So I would believe that there are alternative procedures. And finally, if all put together, if we still believe that the material your material balances are not capable of being validated, one may have to use SA705. I think one of the things as all practitioners is, I have always amongst all my professional brothers sitting here, we always say that pathology report does not tinker. If you have a hemoglobin of 6, it will show you 6. I think our challenge is that we are not using the framework which is provided. The audience will have to learn to read what is right and then make their own judgment as to whether, if the auditors are handicapped and if they have pointed that out, you still as a reader have an opportunity to make sense out of that. You may do your own internal inquiry. Let's not sit into the shoes of a reader and say how will the reader take it. Our role has to be this is a great I think this panel discussion are a great tool to overall lift the whole bar amongst the auditing fraternity. That's what I believe. But yes, the challenges on COVID-19 is not going away.
Certainly. So one important term I learned today is planning for uncertainties from Sandeep sir. That in the current times we need to plan for uncertainties also now.
Yes.
Yeah,
Moving ahead. Yeah.
and
Yes, sir. Yes, sir.
very well said. You can't do everything with the same brush. Like I give an example that you use, say, video for stock verification, etc. Simple example I'm taking. Now you go to, you are doing an audit of a chemical company. You can't carry a video inside, because of those kind of connectivity. So there you will have to send somebody, local person. You can't say, no, I'm sitting here and doing video and stocks is done. So
there is confidentiality issue as well. They will not even allow you to take the video because of the confidentiality, because sometimes the setups can be pretty dangerous.
Yeah, and that static signals and all that is very dangerous as far as chemical companies are concerned. So these are the factors which you will have to bear in mind.
Yeah. Yes, please.
Taking the discussion ahead, this time specifically, the going concern has been one of the biggest concern. To validate whether and the audit client is a going concern or not. So can we discuss, ongoing concerns regard on the evaluation part of it? Many a times client just gives a support letter, let's say from the parent entity, as to how to evaluate that or how to validate that audit evidence, whether that parent entity is really capable of fulfilling the commitment which they are now providing. So any thoughts on that part, Paresh sir? I would like your views first on that.
So I think you have rightly pointed out, going concern is a real challenge, and more so in a COVID scenario, and I was about to mention that there are some industries which are really facing issues, like airline industry or hospitality industry. All they are facing challenges. So that's per se COVID related. And for a going concern, yes, you have to really, go on a dotted line what SF 570 requires you to look at. You have your own checklist of SF 570 and just see whether material uncertainty exists or does not exist, and initially what are the factors which affect going concern, and then coming to whether material uncertainty exists or does not exist. If it exists, whether proper disclosure have been made, and there is a paragraph which requires you to specify in the audit report. So this is how you look at it. Now, coming to your specific question of a support letter, it's not a piece of paper which you are looking at. So you will have to really go beyond that piece of paper or a support letter to really convince yourself that what parent or any other entity has given a support letter which is worth it, and you have to travel beyond that letter to see whether the net worth of that entity which is supporting is there. Even if net worth is there, whether it has a wherewithal to pay, it has a may have expressed a willingness on a piece of paper, but it is a possibility is there, net worth is there, liquidity is not there. If itself is within the borrowing burden and things like that. So all that will have to really look at those evidences. You can't just take a letter and say, okay, fine, this is all done. And in fact, implementation guide has a specific case study to this topic, and they have dealt with very elaborately to make it amply clear that you need to really go beyond the support letter. And of course, the disclosure made for support letter and things like that. And the fact that you are taking a support letter itself shows that there is a material uncertainty exists, because ratios are off, huge losses are there. So that material in the audit. Uncertainty paragraph would definitely trigger in the audit.
Right. Any other panelists want to add?
So just to add, see, as per this implementation guide and latest reporting norms, you need to add a paragraph on material uncertainty on going concern, if there is anything on going concern which you want to report. And we see that paragraph coming in a lot of companies now, especially in the industries like hospitality, the airlines industry, maybe the exhibition industry. And now a lot of these companies are actually having a very high positive net worth, but still you get this paragraph because going concern really says going forward, is there any certainty or continuity in your business in that sense? So, so it does become a challenge really that in spite of a high net worth, how do you really report on a going concern? And that's sometimes where the management also resists that why do you want to report on a going concern? But that SF 70 and that implementation guide really tells you as to what is that fine difference between maybe a high net worth company, maybe a dividend paying company, but still how do you really report and evaluate the going concern or even such companies going forward, whether they will be able to service debt this support letter from management is just one thing where it's a holding subsidiary, but do you have support letters from your lenders? And one thing which I at least like to evaluate is there any working capital mismatch? In the next 1 year, if I find a working capital mismatch where my current liabilities are far exceeding my current assets, what are the steps the company is contemplating? Now, that's, I believe, is a very crucial indicator of the going concern of the company in that sense.
Right. The liquidity part which Paresh touched upon.
Yeah, and you especially in a COVID scenario, you can have your specific checklists prepared so as to answer all these questions, which are arising out of a checklist, and that you should take it as a documentation. Of course, you have to evaluate that checklist. It should not even again become a piece of paper, but that could also help you to even say that okay, going concern is evaluated.
Right.
I may only want to add one practical experience around this, Naysar, that
Yes, Sandeep.
we cannot presume that if the letter of support was provided in March 20, would necessarily be provided in March 21. And these are from practical experiences, because what has happened is that today, unless you have this as a signed letter of support as a part of your audit closure, you may actually find that if you say that this is a going concern based upon a letter of support and this is a pending item, you may be pleasantly surprised that the management may not give you because they believe that this business will drag the whole other businesses sick. So therefore, I think in this COVID scenario, one practical, and we have seen this because even amongst the joint venture partners, where both of them were supposed to provide, one of them provided, the second one was resisting, and the whole board meeting got postponed because of the fact that they could not agree that who will fund the shortfall. So the learning out of this is that you will not be able to take your past experiences as a way forward and presume that your documentation will happen on the date of the board meeting. This is my practical experience around this.
Probably that's why going concern standard also says that whenever a situation triggers which questions going concern, you have to immediately call upon management and TCWG for a communication so as to not leave it to the end. Yes, very well.
Does not necessarily apply only to big companies, right? This will happen also in family-run enterprises. Because between two brothers in a partnership, it is not necessary that because today we have to understand that we are talking amongst the SME sector as well, right?
Yeah. Even a company like Birlas have stated that they will not fund anymore.
Last year we saw Mahindra, Sassoon. We saw that at the last moment they came back and said that that the whole investment they wrote off because they said that we will not fund any, even though there were commitments.
Right. So Sandeep, by continuing the same the COVID-19 scenario, in the time of uncertainties, lockdowns, restrictions, can we discuss some, importance of evaluating subsequent events on this?
Yeah. So my first, considering both the SA 700 and SA 560, I'm not a big fan of doing an audit for March after 9 months. Because finally, what you are doing is that as an auditor, for 1 year fee, you are doing 2 years work. So
because subsequent events
because SA 700 tells you that, and that's part of your audit report, right? That whether have you factored the subsequent events and their impact on the financial statement. So the longer you go forward, the larger the auditors are facing themselves the challenge, and no client pays you for the extended work. So that's my the first part of the that you're pushing things under future calendar is only adding to your both. It is not adding to your cash flows and it is adding to your cost. that's one part of the subsequent event. But nonetheless, coming to a specific, therefore the standard obviously requires you to have an obtaining the understanding of the subsequent event and what effect it has on the financial statement. That's as far as your direct SA 700 is concerned. And then you have your SA 560, which expects you to have the performance of audit from the reporting period to the date of the closure. And therefore, that will take you into two parts. For those which are Ind AS, we know the Ind AS 10, which is your events after reporting period, and for your the other than Ind AS, which is your AS4, contingency and events occurring after the balance sheet date. And then you have to still decide whether it's an adjusting event, not adjusting event, whether is it a disclosure. So I think the major work around, particularly in a dynamic situation like this, where the industries, the international scenarios, the government rules, regulations are changing, the cascading effect of the government rule on some of the other connected industries. So this subsequent event for sure is a is a big chapter, particularly for your inventories, for your debtors. The ECL model, realizability, your contracts, your own ability to be able to deliver and commit the goods. Because if you feel that there are liquidated damages and your factories are closed, or you have a big challenge with your workforce, I mean, these are going to be significant aspect for businesses, and therefore, not that you close early, you can wish away, but the issue is that you have no choice but to fully look at the subsequent, extend your audit. Maybe all that the standard currently says is that if you otherwise on a full audit you were satisfied with the realizability or the liability otherwise on the 31st March, you don't need to perform everything all over again. That is that 560 is clear. But but today's scenario, see, 560 was never designed in a COVID scenario.
Correct.
So today it's a big this is a big standard, a big auditing standard, two accounting, meaning one accounting standard, one auditing standard, and one reporting standard. So it is quite deep rooted.
So in a lighter vein, if I can conclude, is that your audit concluded as soon as possible after the year end, is it?
Money in bank account is better than body in hand is better than two in bush.
Right. So moving forward, very interesting discussions on this. So Paresh bhai wanted your views on the fraud area, that is susceptibility of financial statements to fraud is itself is an area also, and it is an assumption also, management override of controls. So how can this be covered or mitigated? The fraud risk factor can be mitigated in an audit effectively.
Yeah. Okay. So let me first put it that SA 240, the auditor's responsibility relating to fraud in an audit of financial statement, which is a specific standard which deals with very elaborate, gives an annexure, it gives detailed explanation as how do you take care of susceptibility scenario of a fraud. Now, first and foremost, we just talked about skepticism. We have been talking about skepticism, and that I don't know whether one can learn it or not, but it has to be. If you say you are an auditor, I think you should be walking along with skepticism. I'm not saying that it is a watchdog or a bloodhound or anything into that. You have to be alert all the while having a cup of tea also with a client or a client's accountant. You should be alert. So that is where and I have found these examples. I'll tell you, maybe I must have just qualified and we were just talking in one company where auditors and accountants said, sir, these particular product, that price has significantly fallen. We had already finished the audit and now we have to reprocess that product to sell. Now this was one sentence for me was enough. I said, then how are you valuing that last year, whatever the cost we had incurred, they had it. And it had a huge impact because that was one of the major products in their case. So I'm just saying, it's not that there's something rocket science in it. What I am trying to say is that you have to be very alert that anything which is happening around you, relate back. In fact, I tell my trainees and all also that if you are doing a bank reconciliation, and the bank reconciliation is the most important area, and you must know that what is that BRS is linked with the financial statement, and all frauds which you have noted till now have emerged out of anything with the bank statement or bank reconciliation.
Right.
So this is where you need to be very alert. You have to have a skepticism. Then, of course, your audit procedures, RPT transactions, variance analysis. You find anything which is unusual. In fact, when I had experience in one company where there was a salesman, and he would come and talk a lot to you, and I just wonder why this salesman talks so much to me. And it turned out to be that he managed to take away a lot of money out of that company. So these kind of things happen. So this is where anything which is not meeting your eye, you should be very careful. So these are things, and of course you have the processes laid down under the guidance note on fraud. Then now CARO also requires you to report on fraud. So all these will have to be taken care of, and all these will have to be evaluated step by step, so that you are not caught on the wrong foot.
Yeah.
And bank statements, BRS and all. Sometimes you find checks deposited but not cleared, on and on. And then you find that there was something wrong there.
Right.
This is what can happen. Even check issued in one company, checks were issued, and in BRS these were ignored, and those payments were for some statutory payments, and those challans were, now you get challans easily made also. It is not difficult. So this is how things can happen. I mean, there is no end to it. This fraud is no end to it. And as you all know, the vouchers, etc., at a lower level, 30 rupees is made 130 is a very common phenomenon. So one has to be very alert, and one must see everyone's behavior and things like that.
So professional skepticism is the moot takeaway from this thing. Any thoughts, Himanshu?
Yeah, so I think in frauds, there are a lot of frauds, and some of the frauds which are really financial statements are sometimes perpetrated by the management themselves. It may not be the management at a very high level. Sometimes it is even done at a lower level. Say, for instance, if your salary payments or incentives are linked to some targets, then there could be something like your cutoff procedures being compromised. So sales recognized without the saving being shipped out. And now that in even a COVID scenario is becoming all the more difficult to detect and reverse, because in a COVID scenario, cutoff procedures were even otherwise difficult to audit. In a COVID scenario, they are becoming really more difficult to audit. And I mean, that is something where fraud is very easy to take place, that maneuvering with this cutoff the sales invoices. So obviously there you will have to also look at whether something like indirect taxes are paid on it. Because now with this e-way bills and your GST payments which have to be done, that cutoff process to link it with the indirect tax also becomes difficult. Similarly, I mean, a lot of provisions sometimes are delayed or sometimes advanced, especially in the case of, say, tax matters which are there. So again, that is something where if the results are going to change, it can impact the incentives of the management in that sense. So I believe that is becoming a very crucial area. And I mean, besides professional skepticism, I read somewhere that our auditors also now going to do something called a forensic audit, because that is what it is finally coming to, that auditors should also have an in-house team who will also do a forensic audit. And new concept which has come up now in especially financial companies is of evergreening. So in financial companies, you have something like evergreening of loans. So if I have got a prospective NPA, then I give loan to a third party who in turn pays to the NPA party and who in turn pays it back to me or something. Now that is evergreening, which is a new concept which has come recently. Now that is also nothing but financial statement fraud in that case. So I think as auditors, we need to be very vigilant, and new things are evolving on this so-called financial statement frauds which are there.
So basically, the fraud triangle we used to say, the
Yes,
opportunity, rationalization, and pressure. We
correct,
need to be aware about that at every aspect
correct,
of audit. Right.
correct,
Uh,
I
correct.
want to add two, three small things. And Paresh bhai, you took me back down to my articles day, because as a 12th standard student, they asked me this question, that can you have cash in your bank reconciliation statement? So they were tasting your knowledge on BRS. So so BRS was is such an important tool for in our audit process. And obviously the aspect on the digital, the digital coins, and those are the newer evolving technology where the masking is becoming a norm, where you forget your own eyes, but even the best of the technology is not able to decipher. So it is going to be skepticism is something which has to be there, and I only hope that we don't marry with skepticism. That's all I can say. You do your work with skepticism, but don't marry with skepticism.
True.
Very well said. Yeah.
Yeah, and technology, you very well mentioned that technology can create havoc.
Yeah, and with the complexity of transactions of forward options and all, it is going to be very complex one to discuss about.
And what is happening, Naysar, is there are so many movies, whether fiction, non-fiction, they are being made, where it is only giving people more ideas. They say that the thieves wake up their best of the ideas from what they see elsewhere, and then they only improvise that. So what is happening is that the newer generation sometimes, or whether it's not about a newer, but I think sometimes the ideas just multiply based on what they see, and what they see in movies is something you see in real life.
Right, right, right. Yeah, very well said. Moving ahead, Himanshu bhai, wanted to know your thoughts that it is observed that engagement teams are not able to document the nature, timing, and extent of the audit procedures which are to be performed on journal entries. And
Okay.
typically, journal entries are high value ones, non-routine ones, and involve significant management estimates as well. And many a times, this is the pain point when an audit firm is under review by any regulator. So,
Okay.
your guidance on how to deal with this area of audit.
So see, typically when it comes to journal entries, and journal entries are the most abused nature of entries when it comes to frauds, whether it is management perpetrated fraud or any other fraud which an employee wants to do against entity. So typically, I mean, just to make a list of what sort of journal entries are, you can have checks issued and reversed. You can have checks received and bounced, which are all through journal entries in that sense. You can have transfers between uh, receivables and payables. So in short, trying to net off something to show a better current ratio. You can have transfers between related parties. You can have provisions made through journal entries, and there are also some other entries which you normally do through journal entries, like say providing for impairment of any assets, or doing that EIR calculations and other things. Now, some of these are relating to the accounting standards which are there, which really want you to pass those journal entries. But some of the journal and those would be supported by either workings or why they are necessary. Say like an entry for provision for a litigation is backed up by some document which is there. But typically banks which are checks issued and reversed, and multiple times you have got something like transfers between related parties, they may not be documented. Now, most of the financial accounting softwares actually have a provision where you can flag all journal entries. So basically, your audit program should have a mechanism where you flag off all these journal entries and then categorize them into what are really the journal entries backed by provisions of accounting standards and something which are really management or passed by the management in that sense voluntarily. Now, these are the ones which are most difficult to audit and most suspicious from a fraud perspective or from an error perspective. And clearly, a focus has to be with a senior person of the examining these entries, because only he can understand the flow of such entries which are there in that sense. And here again, that concept of professional skepticism will come in as to how you are trying to evaluate the entry based on what is the management intention which is there. And a journal entry also takes you back to the very basics which you learn in accounting, that any journal entry has to have an effective narration. Now, clients do not write effective narrations on journal entries, and which is where you have to educate the clients and maybe take it right even at the audit committee level, that in case an entity is passing journal entries, ask them to write narrations with all details. And there is no restriction now in most of the FA packages on how many words do you want to write in a narration. Maybe when we were in college, there was a restriction of 1 line or 2 lines, but now there is no restriction anywhere in that sense. So I think these are the ways in which you can eliminate that risk of getting adjustments or a so-called fraud or something through journal entries which is there. I can see smiling away. So I am sure something on this.
Correct. So, we very rightly you said, journal entry, sometimes I find that in audit program, a junior person, seeing the journal entries. So then you need to really guide them and explain, okay, do that, but divide into 2 parts. One is the routine journal entries, those monthly journal entries, purchase entries, sales entries, which are, on a month-to-month basis is recorded. So divide into 2 parts, usual and unusual, routine and non-routine. And then non-routine has to be seen by the senior most person in audit team. And that also, some of them can be flagged or summarized to the review partner or an engagement partner. Yeah. And Himanshu said it is a basic to learn.
Yes.
I have some thoughts in addition to what Himanshu mentioned. And so this is one area where, so while there are 3 essays, which is your 240, 315, 330, all of them deal with journal entries. And one of the things we must realize that over the years in technology, you can have different kinds of transaction vouchers which may behave like a journal voucher. And I think it is therefore important for everybody to know. So there are certain packages which will not allow you to, touch balances unless it touches either cash or bank. But there are some of them which will be designed to operate, and therefore, unless one realizes that what is the method in which under an IT environment, what are the categorizations of the vouchers and what behaves like a journal voucher is the first point which I would want to bring through. And because see, when 3 standards, 3 essays deal with journal vouchers, and then finally all of them come back and say that you must have a substantive procedures, particularly related to the closing processes or even while the periodically it is getting closed. So today, whether journal or any voucher which behaves like a journal, in my opinion, it's a knowledge around the IT framework. And then comes a question that even if there are monthly MIS provisions which are being made, and then you don't find those liabilities at the year end, I mean, there has to be intelligence around that, all that, either it has to get settled or what has happened.
Right.
So many a times you find that for management accounts, the a different journal type is passed, but you have to use those knowledge for the purposes of ensuring that your substantive procedures are in place. So I would therefore look at that out of the SA 330, which is, which deals with the response to the assessed risk. And if we believe that as a part of the audit, this type of vouchers can lead to an increased assessed risk, you will have to perform those additional things.
Right. And on the selection, as Himanshu Bhai and Paresh sir rightly told, that non-routine journal entries like rarely used accounts or passed on a weekend or passed from the ID of a person who has already left, those require, or rounded off high value items, those require a closer look by the senior personnel. Right. So moving ahead, Paresh sir, your views on this is a common question which many firms faced in a review, maybe it QRB or any other review, that how to demonstrate involvement of engagement partner, engagement quality control reviewer throughout the audit process, that too on a timely basis. Because practical challenges are there in demonstrating. So need your guidance on that.
Yeah, so true. I will use Himanshu's dictum here. Do what you write and write what you do. So even for a review partner, whenever he or she is engaging to take up the review, need to document it, the time at which it is done, the frequency with which it is done. There could be a review, every week happening. That every week is a fixed day and time, because there is no standard which says you must do this way. So you have to really set up internal processes whereby this review is done. And many times I believe that many firms do review only few hours. Fine, I mean, time and all extent one may look independently taken, but you are all well aware how the timelines have been. The timelines have been so much pressing that if the review is not done on an ongoing basis, then it would become a very good challenge. So coming to your question, you have to have a tabulation whereby you specify what are the critical area where judgments have been taken. Okay, what are the significant risk involved in whatever the areas which have been dealt with and judgment is taken, and other areas of importance. See, it is not that sometimes a decision has already been taken and
Right.
it is convincingly taken, but that not necessarily mean that it has to pass through the test. So it is better that it is also a place review partner. So all significant areas, certain areas where you may prima facie feel it's simple, but material important, that also should be brought. And as I would repeat that it should be done on a regular basis. And SA 220, which deals with quality control of audit of financial statements, has been specifying this. Of course, there is no otherwise mentioned, but as I said, that it has to document the extent and timing of review. Then only one can say. But it is not that if audit has taken 100 hours, the review should take 10 hours or something like that. There's no standard or norm. But there has to be a process whereby this review must be carried out. And as you know that there are thresholds where listed companies, etc., all this review needs to be done. Yeah. So
specifically where the firms are using the audit softwares, what experience regulators have, or in some of the places observation regulators have, is that for entire planning series, the entire sign off is made in a single day. Though in actual sense, the work would have been divided over several days or months, but on the software, the sign off of the partner or EQCR happened on the same day. So the advice which I take from your briefing is they have to sign off on the day on which they have done those activities and not wait till a particular date. So that will demonstrate their involvement continuously.
Yeah, so and work from home scenario could be of help, that whenever you have reviewed, say you have reviewed on Microsoft Teams or any other platform, then you have those trail available. So that could be useful. That trail could be available. And when you have your timesheet of your assistants, which also factor in that, okay, this is the time when the review was done. So their time, it is not that, okay, only audit is done, but audit, their vouching, their area of verification, but meeting with the partner or at the time of review of the partner, all that will correlate for you to support. So it is the document which is very important ultimately to prove that this review is done and carried out.
Right. So, Sandeep bhai, your view.
One more thing, you could have a separate document for each area which has been done, maybe called it a top sheet or a cover sheet and things like that, and where you can list the person who has done the audit, etc., and reviewed by, and important points brought to the reviewer, etc. So, of course, sometimes it becomes difficult, but ultimately it is the document which is going to prove that you have done audit as required. It's documentation emphasis all throughout. In fact, evidence and document, these are the two standards which one will have to really make a part of one's own auditing life.
Yes. Like one of the regulators nowadays asks just the dump of documents without engagement team or partners presence. So it is ultimately the documentation which will have to spit out itself rather than somebody else explaining what that documentation meant actually.
Yeah, of course, and in fact we are told that it's line by line of an audit standard being read to justify that how exactly you have met with that particular line of an audit standard, which is a tall order, but this is what is happening as of today.
Yeah, as they say, audit is not a linear exercise, but one expects to explain that way.
Yeah.
I think Naysar, the point is, I think Paresh bhai is very well made, and we always believe that for an engagement partner, prevention is better than cure. You can't afford to, get into a curative mode, point number one. And it's not about demonstration. I think it's also about discharge of one's responsibility. So I think if both of these are taken care of, I guess what Himanshu bhai mentioned, I think is a fair summarization of a role, and eventually your work will portray the discharge. That's what my belief is.
So, taking this point ahead about the regulators, Sandeep bhai, your thoughts on with the advent of all these regulators, do you believe that defensive audit is getting larger importance than the actual audit? Defensive audit meaning doing documentation to that much extent that it will give an enough defense for a practitioner to sail through any review.
Well, yeah, it's a terminology which is fast gaining ground. I would believe that I will not attribute this to the regulators. I think it is a function and mindset, because ICI also as a regulator, I don't think was saying any different from what the regulators are doing. It's a different issue that it may be today little more heightened, little more microscopically viewed little more in the public domain. But one part is for sure, it is the role of every audit firm to protect itself, its people, and defend its work which it has done. So in my opinion, to begin with, it is our prime responsibility that the work around the audit ensures that the firm remains healthy and remains financially viable and there are no regulatory challenges. But having said so, you definitely have, the if you look at the categorization of challenges which the professional fraternities are facing, right? It is about the whether are you able to demonstrate that the audit team's consideration on financial fraud in the financial statements audit. I think that they want to see very, very categorically as a part of your document. Or there may be, threats around the alleged independence. We spoke earlier during the course of the day, and Himanshu mentioned that as well, around the independence between the Code of Ethics and the RBI regulation and the Code of Ethics and the Companies Act, right? There can be allegations around deficient audit. One can always allege that you did not do your job right, but it is also equally a duty of the audit firm to be able to defend and not cry that look, I didn't have sufficient time, because that is not going to be in your defense at all, or I had a weak team, because none of these are going to be an answer to your defense. Or for that matter, the investigations around the adequacy of the firm's audit documentation and related procedures. Himanshu mentioned about caseware and the other tools where you record it. So I think it is important that it's not about defensive audit. It's about the fact that whatever you do it in time, because I don't think you can eat lunch, dinner, breakfast at one go. I think it's a big mind, because you see, let's admit, Indians generally have been exam oriented right from our childhood. Each one of us, if I speak for myself, we were always exam oriented. You had a Tuesday test, Monday night you will make your parents read with you. Everything is exam oriented. Whether our if SEBI says 45 days, then everything is with that. If it says 40 days, you will do in 40 days. So I guess, in my opinion, it's a mindset shift. If we want, it's not about defensive audit, but if we want our work to reflect in across the organizational, and it's not only about but if you do it right, I think even the client starts cooperating. Because see, the day client sees laxity in your own process, they're more than happy now to go back home at 6 and not wait till 7. I think this is my thoughts around the defensive audit, and I'm sure Himanshu bhai or Paresh bhai may have something more to add.
Yeah, Himanshu, you may be on mute.
Himanshu bhai, you
yeah. So Naysar, lot of times, it has been discussed in professional circles that there are a few category of firms who believe more in documentation and less in audit. Now, I believe that's where the question really comes from, that that's really, I believe, what is a defensive audit, that you fully keep on gathering evidence rather than doing an audit. I think by nature, Indians are quite, I would say, inquisitive, and they normally do a good audit job, though they are not sometimes very good in documentation in that sense. So therefore, I go back to what I said earlier: write what you do and do what you write, and that is what exactly the regulator also wants. And as Paresh has rightly said, the regulator reads standards on auditing as a mandatory thing. Each and every word in that standard, they say, is a mandatory thing rather than a recommendatory thing or a procedural thing in that sense, which is maybe an extreme step to take. And if you see some of those orders of the regulators, which of course are subjected now to some litigation, but they have said that we have seen your documentation, and we find that some of these lines in the standard on auditing have not been followed in that sense. So I believe almost all firms in India may find it very difficult to meet the expectation of the regulators, but that does not mean that we should get into a defensive audit in that sense. And also is happening today in practices. Sometimes, no, say there is an audit being done, and after 2-3 years there is a fraud being detected. Now people always look at hindsight whether you were right or wrong earlier. Now they cannot do that, because I have to see my situation when I was doing the audit and when I was signing off. So I have to put myself in that situation rather not on hindsight. So a lot of today's the comments which come in the press against auditors are really looking at hindsight and say that what was the auditor doing. Now they have to actually go back and investigate whether at that point in time was that information available. If it was not available, it's clearly a judgment which an auditor has taken. And if he has documented that judgment well, I don't think he is at fault in any case.
Very true. Very true.
Very aptly put. Maybe the expectation gap, which we have to either reduce by reducing the expectation or heighten in our procedures.
Yeah.
Moving ahead, Himanshu, your thoughts on importance of communication with TCWG at the time when CAM has become now applicable, because it
Yeah.
has been observed that TCWG has been communicated only, at the quarterly audit committee or at the time of signing of engagement letters. So your views on that?
I think from the moment this SA 260 revised has come, a lot of firms, and I believe a majority of firms who give their audit reports do some sort of presentation, which may be either a formal presentation or oral presentation to those charged with governance. Now, those charged with governance typically in a listed company would be the audit committee, but it could as well be the top management which is there. And this is something even in a partnership firm it would apply, that I need to make a presentation to the partners of the firm on what are my observations in an audit. Now, this is something very important, because in the course of audit, I may have found several lacunas in the accounting systems, in the controls, which may have been rectified later on. But they may be so important that at least those charged with governance and not in day-to-day management should be made aware about it. And I believe in today's scenario, audit committees look forward to that presentation by the auditors as to what are the important areas they encountered in the audit and how did they tackle it. Of course, the most important areas in those discussions also become a key audit matter for listed companies or for some other larger companies. But they clearly are areas which would need to be brought to the attention of management, and it serves two purposes. One is telling the management as to what are the important areas which are there in the company, but it also tells a very important thing to the those charged with governance, that the auditor really has been doing his job, because otherwise all audit reports are monotonous. Unlike an internal audit report where there are findings, statutory audit report is very monotonous and almost same in all the companies. So the audit committee therefore should know what else the auditor has done before issuing such a report. So I think it also makes a sort of a value add for the statutory auditors when they do this to those charged with governance.
Right. I think it cannot be more exhaustively covered than how you covered, sir. Thank you for that. Uh,
Yeah,
Moving
so
ahead.
I'll just
Yeah, yes.
add one, in case of small entities and things like that, presentation is not there. It could be dealt with by way of a letter to management, no?
Right.
So that, as Himanshu pointed out, weaknesses in internal controls, etc. And even to an extent, when the staff is inadequate on the client side, that also you could point out through a letter of management. That
Right.
helps, because sometimes delay is not on our side, sometimes delay is on their side, and many times they want to delay it so that under pressure the decisions are taken as they want. So all these factors have to be really looked into.
Very practical. Yeah. Moving ahead, Sandeep bhai, your views on right now what we see is very complex accounting transaction as well as accounting systems, and there is more and more need felt for experts like valuation experts or information technology experts, and many a times smaller or mid-sized firms are not able to afford these experts on a full-time basis. So how to go about this as well? What if ten this tantamount to outsourcing of our audit work? Ten someone challenge that you have outsourced your audit work to outsider. So how to go about this aspect in the current scenario?
So, that's a good question, and I think it is getting increasingly relevant for many industries which are extremely complex, and sometimes they are industries in which no amount of accounting or auditing knowledge is ever going to work out. You may have a, let's say, if you're doing an audit of a company which is owning art, while there may be valuers who may do value that art, but now whether it's an original or a replica, I don't think today any of the audit teams are going to be able to do it, right? So today, the standard, both the 500 obviously talks about, the SA 500 talks about where the company engages an expert, and therefore you only look at it from all the professional skepticism around, how much of the work which they are doing around valuation. But your 620 certainly deals with the aspect that for other than auditing and accounting, you have complex industries, complex financial instruments, pieces of jewelry, which are all subject matter experts of the people who are in field, and therefore they are never expected to be part of your organization. So subject to the confidentiality and independence. I think every client or every entity definitely would like to ensure that whichever professional experts you are working with, there is a confidentiality arrangement, there is independence is not threatened, and therefore I don't believe that it is a in nature of an outsourcing. The whole engagement will have to be with reference to your SA 620, because you are eventually using the work of an expert in those field, and it's a and SA 620, in my opinion, is a very fairly well laid out standard which helps the SME practitioners to be able. So first of all, we must know that I need an expert. I think the starting point is that I know all is the biggest myth in while you're doing an audit. So and Google is not an answer. There is a industry matter expert, and that industry matter expert must be on board. The only thing which the standard SA 620 goes on to say, that only because you have engaged an expert does not mean that your obligation towards the work is getting reduced in any event. So one, it does not allow you to give a reference, and if it allows you to, while there is another paragraph which allows you to give a standard, but it also says that your responsibility as a primary auditor remains. So I believe that for those managed audit committee or somebody who's today asking those questions around the subject matter, whether in IT field or any other field, I think as long as independence and confidentiality are in place, things should
It should
work,
be
and
doable.
that should be the way out.
Right, right, sir. In terms of reporting changes, if we say, what are the major trends which we are seeing nowadays in the current situation? Himanshu, by your views on that?
So, Naysar, if you look at the last 3-4 years, no, the regulators have really started taking action against auditors, and that has changed the way the reporting has happened in the last 3-4 years. Before, if 3-4 years, if you see, do some analysis, there were very few audit reports which used to come up with qualifications, disclaimers, or something. In the last 3-4 years, you find that the percentage of audit reports with disclaimers, the qualifications have really gone up, and they are on various matters, including the going concern, which is there, impairment testing, recognition of revenues, and whatever. So I believe the regulators have played an important role in pushing the auditors to issue reports what they have actually observed in the course of the audit, which earlier maybe they were not very, confident of issuing such reports which are there, though I am sure before that also they would have found such things. So I think the trend has been that auditors are becoming more bold, and I think they should become more bolder, because there are still a lot of companies where there is a so-called financial fudging which could be happening, and therefore auditors need to really put their foot down and start reporting what they see rather than what the management wants. So I believe as auditor, that is what I normally tell our teams: please report what you see rather than what the management wants to see. And if I look 2-3 years or 5 years down the line, the reporting will also shift, and I am actually shifting gears here. The auditors will have to start reporting on climate changes going down the line, and that's a real shift audit reporting focus which will come in. Today, if you look at the European Union and if you look at audit reports of companies like British Petroleum, they have already started reporting on climate change. And how do they report on climate change is something today you will find that how do I know that how a climate change affects my company? But in European Union, it is almost mandatory for auditors to report on climate change. So I believe as auditors, we are also going to become environmentalists going down the line. And I mean, that's going to be a real challenge and a very interesting thing as to how we will cope up in the future. So that's the future trend. But the current trend obviously is issue reports what you see.
Just to add on to sir what you said, many of the Indian companies are also now adopting that integrated reporting, the Tata Steels and the Vedantas
Right.
and all.
Right. But
So
there is no
maybe
reporting on it. There is no reporting on it.
there is no
It
reporting
is
on
not
it.
true and fair reporting on it. It will become part of the main audit report down the line.
Interesting, very interesting. So increased work going ahead for us.
Yes, yes.
Yeah,
So I think when I issue the audit report, I will see whether the sun is shining or is it raining.
correct. Paresh sir, your thoughts on nowadays auditor is tasked with a heavier responsibility, especially the change in expectation, because of the change in framework, how to navigate in the sense there are new requirements for CARO, the audit matters, additional reporting requirements under 143, which recently has come. So how to meet up to the expectations of various stakeholders? Your views on that?
Yeah, I think time, as you rightly pointed out, those times are turbulent times. But we as chartered accountants have always been able to meet those requirements. But this expectation gap, is very large, and then with media and all newspaper articles and things like that, I think expectations gap has increased or increasing day by day. So the question is how to deal with it. See, we are doing audit with resources. Now our resources is manpower, our resources is technology. So we need to invest in manpower. If I need 3 persons, let me have a 3.5 or a 4 persons to carry out my audit. So, last minute rush does not happen. Your documentation is not missed out. And you have a quality, a continuous training of your staff, so that, or depute them on any of the seminars being organized by institute or DCAs and things like that. So, and of course, the standards on auditing, accounting standards are there. We all are well versed with accounting standards, or always, focus on accounting standard. But now your focus is equally has to be in audit standard, and audits, all our standards on auditing and auditing standards have range to cover. You have series of SA 200, which is dealing with objectives and responsibility. Then you have SA 300, which is understanding the entity, business, and things like that. And then of course you have SA 500, which gives a guidance for actually doing audit. And then you have SA 600 for responsibility in case of using work of others, and of course your SA 700 series for reporting. So your SA has the full gamut to cover what is required in this time. So it was yesterday or today or tomorrow. Your auditing standards will only come to your rescue. But for that, technology also is one thing which we will have to adapt as fast as possible, and your resources and qualified resources, all that will be need, and the training. I mean, there is no alternative to all these three. There is no alternative, and you will have to incur cost. You may find that okay, the the margin which you are getting is slightly less, but be it for an audit, you need to really work on these aspects: technology, manpower, training. Yeah.
Can we say that the audit as such has it does answer obviously, but can I conclude in a way that these additional reporting requirements, be it 143 or TARO or key audit matter, has actually not changed the audit procedures per se, but it has only increased the reporting requirements?
No, car 2020 has significantly increased. In fact, I mean, if I were to, I don't know, I could speak from this platform, but it is not an audit area at all.
If you give time to Paresh bhai, we will have to extend by 1 hour on this topic. Paresh bhai has got very strong views on Caro 2020 as to what is happening to the professional fraternity.
Maybe we'll have that one.
World over, this kind of Caro 2020 is not there. And all said and done, ultimately it boils down, it is unfortunate because clients don't perceive this. It's good that now all these requirements, quite a few have come in Schedule 3 also, so that is client's responsibility also. But otherwise, they are not really concerned about your Caro requirement. Yeah, it's your job, you do it. And when it comes to our compensation, that's not been dealt with. Sorry to say all this on this platform, but this is what it is. So Caro 2020, according to me, I think it's there. Few points of audit related are there, but otherwise it is much more than audit. And so you have to gear up to Caro 2020, and more so you should gear up now only, rather than waiting till even December. So as soon as you are through in September or October, just sit on that Caro 2020 and see to it that how the company is going to implement it, how you will be able to check it, and things like that.
The 1 year extension should not be proven lesser extension, so to say.
Yeah. No, and some of the clauses are applicable today, no, like stock quarterly returns and all are applicable as of today.
Yeah, correct. Sandeep, your thoughts on a very practical point on acceptability of digital signing, and a practical aspect again, that a same document is signed digitally by one party and physically by other party.
No, it's a good question. I think obviously our SA 700 does mention that the laws and regulations may allow use of electronic signature. I think that's what SA 700 already deals with it. And then you obviously have your Information Technology Act, which recognizes the digital signature. And AASB in last April came out with the announcement on the digital signature to be affixed by the auditors on various set of attestation or other documents which they are issuing. So I mean, like, the announcement of AASB is already there. Obviously, the one part which was important to know that only because you use digital signature does not absolve you from your UDIN responsibility. UDIN is independent of your digital signature. Digital signature is only saying that you can attest a document to which either is your certificate or it's a part of an audit report or a financial statement. And obviously, because it has a timestamp, you in areas where the management is supposed to sign first, you cannot affix it ahead of time. I think that's the known aspect of it. So between the announcement, SA 700, Information Technology Act, and obviously the safety around the usage of digital signature, so that it is not affixed by anybody else, because that is another area of what happens is that you can your hand signature is something which the handwriting expert may be able to do it. Now if the digital signature is going to be misused, then you have another set of challenge. So one will have to be careful around the utilization, because obviously there are reports which are available as to where your digital signatures are used, and I would always recommend that we talk about internal financial control at the client level. I think it is important that you have your IFC at your own organizational level on use of digital signature. So to answer, yes, it's a valid document, whether signed physically by them and you use digital, or you use digital and they sign physically, whichever way. But it would, in my opinion, with the announcement and these three standards, a very good, useful tool.
Yeah, so basically IFC control set firm level is also important, which is a very valid point Sandeep bhai has put up. Himanshu bhai, your thoughts on which are the standards, areas, procedures which you see are most important while doing audit?
Naysar, a very difficult question, because if I divide an audit, it basically involves four things. It's audit planning, audit evidence gathering and verification, then audit documentation, and audit reporting. Now, whichever standards cover these four, all are important. But I would say that amongst those things, when you come to the very first thing, the planning stage, if you don't plan an audit properly, everything else is not going to be proper. So when you come therefore to audit planning, following those SA 300 and 315, assessing the risk of an organization, and then how do you plan and evaluate the risk and plan for the audit depending on the risk. I believe that's the most important area when you start the audit. If you don't plan an audit well based on your risk assessment, you will not be able to draw proper samples, you will not be able to mitigate your risk. And this is something where I believe a lot of auditors are not paying enough attention. They just go by something like a random sampling or something, even sometimes for a listed entity. So basically understand the industry, understand the regulations of the industry, decide what is your risk, and depending on the risk, try and determine the areas which you want to cover, draw samples based on the risk. Now all this is part of audit planning. Now that I believe is the most important area, because if you don't do this well, your audit evidence would be wrong, your documentation would be wrong, and your reporting also would be wrong. So therefore this 300, 315 I believe should be the most important standards in that sense.
Quite interesting. So as we used to learn in theory. Hello, am I audible?
Yes, yes.
Am I audible?
Yes,
Yeah.
nice.
Yeah. So as we used to learn in theory that 60% of audit time should go in planning, that actually should be in a practical
Yes,
life as well.
yes, yes, yes.
But Paresh bhai, I will come to you on uh, what are the tools or techniques or material available to audit, to aid audit and compliance with auditing standards as well.
Yeah, I think
Are there any tools available?
Yes, yes. Of course, there is gamut of techniques, document. I mean, checklist or publications available. DCA has their checklist. Our institute also has checklist, and I believe institute is also coming up with audit tool whereby everybody can use that as a platform. So that would be a very good thing which may work out to be. And then there are software called Idea software. And then Cashware is there. I think Himanshu may be able to talk more on the that aspect. And then, of course, your whatever checklist you have, you can put it on a toolkit form or an Excel sheet form, and then use these techniques and material for compliance with standards on auditing. But one thing I would like to tell here that whenever we use checklist, any checklist for that matter, I take an opportunity to say that yes, no, and not applicable. Those three columns are not sufficient. Okay, we should not be using that three columns as just ticking. I think a support, if you are saying yes, why you are saying yes, if you are saying no, why you are saying no, and if you are saying not applicable, why you are saying no, then your compliance is done. Otherwise, it is just paperwork again. But I think Himanshu will talk about Caseware. He has a good idea about it.
So just add on what Paresh says, Caseware is a software which is one of the softwares available in the market. Since we use it, maybe I know little more about it, but there are obviously equally other softwares also available for this. But this is one software which they have tried to make it in line with what NFRA wants to see in terms of documentation. So maybe it falls in line with some of our standards on auditing, on evidence gathering, the risk assessment and other things, and at least allows you to become NFRA compliant in that sense. So, and lot of questions in the checklist have been also drawn from whatever the queries raised by NFRA when they give their interim report on some of the other audit findings which they have. But yes, technology is important, whether it is at planning stage, execution stage, reporting stage, or documentation stage.
Right. So with that, we come to the end of these questions. I would like to thank the panel members and WRC office bearers, Drishti Desai ma'am and Sushrut ji. And it's been really a knowledge enhancing session. And thank you for this opportunity.
Yes, sir, I may want.
Just a minute, there might be some questions. So I'll just ask if there are Mishra ji questions there. So in the meantime, I would really like to express my gratitude. That was an excellent session. And all the practical aspects, because otherwise it's all very theoretical when we look at the standards. But today's session actually gives, meaning to all the standards which were always discussed. So I'm just waiting. I'm sure there must be a lot of questions.
Questions come up, I would, I'm sure my panelists also would like to have a word for Naysar and for the organizing team. Naysar, you've been a great moderator to the dot and probably, evoked the right kind of questions. It was a pleasure being part of the panel discussion. And thank you, Drishti.
Yeah,
Yes,
so they are
thank you,
posting
Naysar.
the questions. They are posting the questions.
But I am sure, Drushti, one of the questions will be that with audit becoming so onerous, how do I give up my COP? That I'm sure should be one of the questions.
Yeah, so I think question has come up.
So Sandeep, will you like to try this?
This is so I'm sure. So there are two links to this. First part of it is that I presume that this would be, let's say, a non-company for tax audit purposes. They are saying that we are buying and selling, or we buy, we consume, and we sell, and therefore there is very limited level of inventory for the purposes of for us to maintain the so for chocolate making, I can understand because of maybe for a short shelf life. But if you have a, let's say, a refrigerator, or you have I have a cold storage, I don't think this answer is going to be acceptable. So one will have to understand that what is the quick turnover, because even for valuations, we know that there may be retail margins are also, and in cases where there are thousands and thousands and small items, I'm sure. So I would I would deal with this answer with reference to whether for their own business, do they minus the stock register actually control the business or not? That's the way I will look at it. It's not an answer for your accounting standard or for standards on auditing or for a tax audit. It is essentially driven from the business.
Correct, absolutely, absolutely. And obviously, valuation, they may need to use that retail method.
Because we know this, that in some cases you have purchases, you have the sales or usage, and then you have a closing stock, and you may not necessarily all the time have consumption records. This happens in many industries. So it's not about the fact that whether it is practical or not practical, but I think if the business is right, then this is one will have to examine from that angle.
That seems to be the only question which is posted here.
मैडम एक ही क्वेश्चन था.
Acha. Very nice. So I think people have understood very well. I saw that the number of participants has completely not moved right from the start till the end. That shows how interesting the entire panel discussion has been. And in fact, we are also looking at WRC. At WRC level, we want to even come up with podcasts. And these kinds of discussions we can put up even on podcasts. So thank you very much. And I would now request, Monarch to propose a very well-deserved vote of thanks. And at this juncture, I would also like to thank Chintan Patel, who structured the entire program, the sessions and the topics, Chintan Patel, Regional Council member. And I would like to thank Sandeep Bhai, Himanshu Bhai, Paresh Bhai for all your support always. And Monarch, I can't see you. Yeah. Okay, I think Monarch is really having some issues. So on his behalf, I would like to thank everyone for giving us this wonderful session today and benefiting the members immensely. So on behalf of WRC, I propose a very well-deserved vote of thanks to be carried out with a loud round of applause wherever you are sitting. So I would really.
Lastly, we acknowledge chairman's presence also.
So he's specially joined to thank you all. Seriously.
Thank you, Manish.
Thank you.
Thank you so much.
Thank you so much.
Thanks all the panelists and Parekh sir for wonderful session. I was listening the discussion what you are carrying, and I want to discuss further. Maybe Paresh bhai your view on Caro 2020. Later on we will have discussion. Really great session.
I think at your position may be difficult to hear my views.
Definitely.
Yeah,
so we not be on this platform, but definitely off the record we will have some discussion, Paresh bhai.
Yeah, sure.
All right.
Thank you, Naysar. Thank you very much, Naysar and Padma Shri and everyone. Thank you very much. Yeah.
Pleasure.
Thank you.
Naysar, we hope to see you soon sometime again and have the pleasure of your both either as a moderator or as a panelist. You are good.
Pleasure, sir.
Thank you.
Pleasure. Look forward. Yeah.
All right. Yeah. Bye.
Okay.
Thank you. Bye, Himanshu. Bye, Sandeep.
Bye.
Thank you, Darcy.
Bye-bye.
Bye,
Bye-bye.
Manish, Naysar. Bye.
मिश्रा जी
Bye.
क्लोज करो मीटिंग
मैडम